Hey everyone, welcome back to Corporate Decoder, the place where we try to take the most boring documents and make them, well, slightly less boring today. We're diving into Nordson Corporation's annual report, and let me tell you, they've got some interesting numbers to unpack, especially when we look at their sales and how they're managing their money. Before we dive in, if you want more of these deep dives into corporate filings, smash that subscribe button. And hey, we've got a killer community in our Discord, linked right down below, so come hang out. So, Nordson makes precision technology products used in all sorts of industries, from medical devices to electronics to consumer goods. Their latest report covers the year ending the 31st of October 2025, and overall they saw their sales tick up by a pretty solid 3.8%, bringing in over $2.7 billion. That sounds good. Right? It means they sold more of their stuff. But here is where it gets interesting. Even though sales went up, their gross margin, which is basically their profit after paying for the materials and direct costs to make their products, stayed pretty much the same at 55.2%. That is not necessarily bad. It is actually a really strong gross margin, but it means they didn't manage to squeeze more profit out of each dollar of sales. They just sold more. And when we look at the bottom line net income, which is what is left after all expenses, taxes, and interest, it also saw a modest increase of 3.7%, reaching almost $485 million. That is a decent profit, but given the sales growth, you might expect it to climb a bit higher. It tells us they are successfully managing their expenses to keep pace with those sales. Now, a big part of how companies grow is through buying other companies. In 2024, Nordson bought Atrion for a hefty sum, around $790 million. This acquisition is part of their strategy to expand in the medical field. They also bought Arag in 2023, adding to their agricultural tech offerings. These moves are clearly impacting their numbers, especially in the medical and fluid solutions segment, which saw a whopping 20.1% increase in sales thanks to these acquisitions. However, their industrial precision solutions segment, which is their biggest, actually saw sales go down by 4.8% overall, with a 5.1% dip in organic sales. That means even without considering currency changes or acquisitions, the core business in that segment sold less. This is likely due to some tough conditions in areas like polymer processing and industrial coatings. On a brighter note, their Advanced Technology Solutions segment, which serves the semiconductor and electronics markets, saw sales jump by 4.9%, driven by strong demand in electronics dispense and processing. This shows they are tapping into those hot tech markets effectively. Geographically, their sales breakdown shows the Americas making up 43.2% of their business, Europe 25.9%, and Asia Pacific a solid 30.9%. It is great to see a strong presence in Asia, a key growth region. Now let's talk about goodwill. This is basically the extra money a company pays for an acquisition over the fair value of the things it buys. Nordson has a lot of goodwill, almost $3.3 billion. They test it every year to make sure it is not losing value. The good news for them is that in 2025, their tests showed no significant issues. This means their acquired companies are still considered to be worth what they paid for them, or more. But it is not all smooth sailing. Nordson faces a gazillion risks, as most big companies do. One of their biggest worries is changes in economic conditions, both in the US and globally. Think about recessions, trade wars, or just general uncertainty. They also mention currency exchange rates hurting their results if the US dollar gets too strong. Cybersecurity threats are also a major concern, which is pretty standard these days. They acknowledge they've had incidents and expect more, but they believe so far these haven't hurt them too much financially. Still, a big breach could cause serious problems, think data loss, production shutdowns, and a damaged reputation. Protecting their patents and brand names is also crucial. If they can't keep others from copying their technology, it could really hurt their competitive edge. And then there are the risks tied to their own strategy. They rely heavily on acquisitions, but integrating new companies can be tough. If they don't manage to merge them smoothly, or if those acquired companies don't perform as expected, it could drag down their overall results. Scaled long-term debts are scaled looking at their debt situation. They have about $2 billion in long-term debt. While they have plenty of cash on hand and borrowing capacity to cover their needs, interest rate hikes could definitely make that debt more expensive to manage. They are currently compliant with all their loan agreements though, which is a good sign. Now, let's talk about my take on all this. Nordson is a big, established company that knows how to manage its business. They've got strong market positions in key areas, and their consistent profitability is impressive. Their focus on precision technology and strategic acquisitions in high-growth sectors like medical and advanced tech seems smart. However, Their reliance on global markets means they're pretty exposed to economic downturns and trade tensions. That dip in sales in their biggest segment, industrial precision solutions, is something to watch. It shows that not all parts of their business are firing on all cylinders, and they need to keep innovating and managing costs carefully across the board. The fact that their net income grew slower than their sales, even with strong gross margins, suggests that their operating expenses like selling and administrative costs are going up too, likely due to those acquisitions and other investments. Overall, Nordson seems to be navigating a complex global environment pretty effectively. They have a solid financial foundation and a clear strategy for growth. The biggest question for me is whether they can continue to drive strong organic growth in all their segments, especially in the industrial sector, while also managing the risks associated with a global economy and potential future acquisitions. Their ability to integrate those acquisitions smoothly and realize the expected benefits will be key. Alright, that is our breakdown of Nordson's latest annual report. What do you think about their performance and their acquisition strategy? Are you worried about that dip in industrial sales or excited about their tech and medical growth? Let us know your thoughts in the comments below. If you found this breakdown helpful, hit that like button and subscribe for more insights into the world of corporate finance. And seriously, come join us in the Discord. The link is in the description. Thanks for watching, and we'll see you in the next one.